Good morning. It's Monday, November 20th, 2023. It's Thanksgiving week in the US. And the first topic of the day is Turkey week seasonality. So, Thanksgiving week seasonality, there's a very strong tendency for stocks to rise during Thanksgiving week. So there's a back test. If you go back to 1960, I posted this on CEO.ca actually yesterday. 63 trades since 1960. The average gain is 0.64% with a win ratio of 68%. So you buy the Friday close before Thanksgiving and sell the Friday close after Thanksgiving. And the results are pretty powerfully strong, positive. Profit factor is 2.2, max drawdown 7%. And the gain is higher than for any random week during the year. Well, just looking at stocks right now, the Nasdaq in particular, we're already up 0.65% today, Monday morning. So we're already at the average gain during Thanksgiving week over the last 63 years, just in 30 minutes of trading on Monday morning. It feels like we are, well, first of all, the pendulum, the market pendulum that swings back and forth from fear to greed and back again. We were at fear October 25th, end of October, with the Israeli army about to roll tanks into Gaza and a lot of Arab countries making verbal threats, including Turkey. And look at what's happened since then, straight up. So we've swung from fear, and now we're getting into greed and euphoria. I think it's quite clear this morning. And I'm not saying this is a short here either right now. There's probably further to go here this week. Again, the seasonal tailwinds are extremely strong for stocks. So not something to fade here straight away, but I think we are getting to the other side of the pendulum, and maybe we'll be there later this week. But yes, this Thanksgiving week in the US is very strong seasonal tailwinds. It's basically the best week of the year in the stock market. By the way, I didn't tell you who I am, but you know who I am. Rob Sin at CEO Technician on Twitter and X. There's some imposters that are trying to act like they're me. So please double check who you're following. There is only one CEO Technician. You can usually tell by the follower count. I have about 12,800 followers, and it's spelled CEO Technician with no extra letters or underscores at Goldfinger on CEO.ca. And please like this video and subscribe to my YouTube at Goldfinger Capital if you find value in this video. I plan to do a couple more videos this week, maybe even a Thanksgiving Day video, so look out for those. The second talking point of the morning is lower Treasury yields equals higher stocks. So just looking at the correlation, between the 10-year note yield and the S&P 500, you can see we're at a negative 94% correlation. Lower yields equals higher stocks, higher yields equals lower stocks. It's not an accident that the S&P bottomed right in here in this area, and stocks have been rallying ever since as the 10-year has declined from 5% to 4.45% here this morning. You have to wonder, just looking at this chart, looking to the left, and this area of previous resistance near 4.35%, if we're getting close to support in yields here, and maybe that could coincide with a near-term peak in stocks. So just something we want to be aware of, this correlation, and something I will be looking for later this week if I start to hunting stocking on the short side, I will be looking to see if this is lining up on the 10-year yield chart. I would have to think that the 10-year note yield has big support in between 4.3% and 4.4%. So we're almost there. That's something we definitely want to be cognizant of. So why has the Treasury yield curve uh, flattened so much, and why has the 10-year note yield fallen so much in the last several weeks? Well, a lot of it has to do with the fact that CPI and PPI data continues to confirm that inflation is on its way back to 2%. In fact, the PPI data last week showed a whiff of deflation. A lot of that has to do with price of crude oil, natural gas falling in the month of October. But it's pretty clear that there's a feed through of deflation, quite frankly, uh, to consumer goods. Walmart saying it's seeing deflation in some of its offerings, and just the fact that prices are falling in a lot of the goods it sells, it expects consumer spending to disappoint over the holidays. And we saw Walmart get hammered about 9% last week on that news. Basically, their outlook was disappointing, even though their earnings were in line with analyst, expectations. Also, jobs data is weakening considerably, and that's again helping to show that the labor market rebalancing is well underway. So the Fed is on its way to orchestrating this rebalancing and this return to 2% inflation that Powell has been talking about for the last year. So it's really happening. And there was a nice note from Pantheon Macro that basically said that in their view, they are leaning towards the idea that the Fed will be actually switching from worrying about too high inflation to inflation falling too far. Okay, and this is going to happen over the next year. The Fed is going to gradually switch its posture from being tight or too tight to easing. Um, and they will respond by easing rapidly. So I tend to agree with that view, and the market has started to agree with that view as well. Suddenly, there's a 1 in 3 chance of a March 2024 rate cut. So previously, a month or so ago, a March rate cut was not factored in by the market at all. In fact, the market was still seeing a chance of another rate hike. So now the rate hike is completely priced out, and we're seeing a 1 in 3 chance of a cut in March and probably about a 50-50 chance of a cut in May. So suddenly we're talking about the possibility of rate cuts in the first half of 2024. And obviously that has a lot to do with the trend in the CPI and PPI data and the fact that the jobs data is indicative of a labor market rebalancing. Okay, so they show this chart that's basically showing that the supply chain problems of the pandemic. You can see we had big supply chain issues in 2020 and 2021. Well, that's eased now, and that's helping to bring down inflation. And the Zillow rent index, I mean, we're coming back right to almost 2% right now. So the Fed is orchestrating the so-called soft landing, and I think actually I'm not necessarily subscribing to the soft landing view, but it seems like the rebalancing is happening and inflation has absolutely cooled off. Now the question will be, has the Fed tightened too much? And I think that is where we're going to be asking ourselves that question early next year. That probably with a 5.5% Fed funds, with inflation clearly back under 3%, and a labor market that is weakening pretty rapidly, imagine another 2 or 3 months at 5.5% Fed funds with QT in progress and well underway. You have to be thinking about, there's the possibility the Fed actually may be tightening too much, and maybe the last rate hike was actually a policy error on the part of the Fed. And that's where I'm leaning towards. And that brings us to our next topic. I think the conditions are virtually ideal. It's never perfect, but the conditions are very supportive for a precious metals rally uh, right now, okay, and into year end and into early 2024. First of all, just near term, I see the daily sentiment index for gold and silver at around 67, 68. The charts are looking very constructive, prices above rising moving averages, and seasonality is favorable for most of the rest of the year. Okay, so I definitely like this setup here in gold and silver. And this is an interesting post from Warren, or graphic from Warren Pies at 314 Research. And basically, he's showing that this is kind of the textbook sequence of events that we could expect over the next couple of years. So we're in the pause, and by early next year, we're going to be in the easing. And generally, when the Fed is easing, especially at this kind of a pace, it coincides with a recession, the R word. And so a recession in the economy with a downtrending stock market and a falling Fed funds rate is literally the ideal set of conditions for a precious metals rally. So, depending upon your outlook, you could get very excited here for what's to come in 2024 as a precious metals investor. And there's a lot, I'm feeling pretty optimistic here, quite frankly. I don't think many people are positioned for a big move in precious metals, especially in the miners. And I still see a lot of skepticism out there that any rally in gold above 2000 is going to be faded and it's going to fall right back down. So far, that has proven to be true. But how many times, can gold test above 2000, prior to actually sticking and actually holding above it, right? So this is my daily chart. This is not updated, but I was previously showing this complex head and shoulders that did trigger, but then it proved to be a failed move, and we returned right back above the 1970 level. So right now, we're still consolidating, but holding slightly above that 1970 level. I view this morning's pullback as a buying opportunity, both in gold and the GDX. And I actually took advantage of that in the GDX. And certainly, if gold can get back above, let's say, 1985 at some point later in the week, there would definitely be the threat, the possibility of a move back above 2000, right? And just count the number of times that gold has been above 2000 in 2023. It's more than a handful. Okay, so we have to be thinking that perhaps this next time is actually going to be the one that finally sticks. So I am quite bullish on gold here and silver, and a lot of it has to do with the fact that I could see the Fed cutting rates 3 or 4 times in 2024 and continuing in an easing cycle into 2025. And again, the market is forward looking. It's going to be looking ahead 6 to 9 months, and it's going to start to price in that easing cycle, which is absolutely rocket fuel for precious metals. Turning to the junior mining sector, I'm pretty optimistic here. So to be clear, 2023 has been a very poor year for the junior mining sector. There's no argument about that. Sentiment is extremely depressed. A lot of people are hiding in their bunkers, worried about tax loss selling, knocking share prices down even further. But from a contrarian investor standpoint, those are the setups sort of at these cycle lows with fear in the air, that you would rather be a buyer in. You don't want to be a buyer of junior mining stocks when there's greed and euphoria. In fact, that's always the worst time to be putting capital to work in any sector, when there's greed in the air. So now there's not greed, there is fear, and people are being very risk averse. Uh, there's another factor that I like, and that is that cost inflation is flattening out. So the cost to do exploration programs, the cost to do anything essentially is no longer rising like it was in 2021, in 2022, and even earlier this year. Uh, we're seeing that sort of cost inflation throughout the mining sector flatten out. And we're even seeing that with the seniors, with um, some stabilizing in the cost per ounce to mine an ounce of gold. Again, valuations are low, sentiment is depressed, and this is against the backdrop of a rising gold price. Gold is in an uptrend, so share price valuations are completely bombed out, extremely low. But the metal, gold itself, is in an uptrend and doing quite well, up almost 10% year to date. And then shorter term, we have positive seasonality. So this is, I could sort of zoom in here a little bit, but I posted this chart. Here's where we're at right now, and we have tailwinds for the next couple of weeks. Then usually there is some sort of tax loss pullback early next month, and then there is a very, very strong, the strongest rally of the year. Usually happens in the final 2 weeks of the year. So generally, we have seasonal tailwinds in the gold mining sector. Um, so yeah, I think I got to all my points. In the charts here, a lot of people are going to say, "Well, this is a head and shoulders bottom." Okay, fair enough. It's possible it could turn out to be left shoulder, head, right shoulder, but we would still need a clean breakout above $2,020 an ounce in, let's say, the next month, to have this pattern actually be completed and trigger. And yeah, the price target would be above 2,100, but it has not confirmed yet. We still need, all of these patterns need a confirmed breakout above the neckline. You could say the same thing about the GDX chart: shoulder, head, shoulder, neckline at $30. Let me see if I actually have that chart here. Yeah, there it is. Okay, so this is the GDX head and shoulders pattern. I posted this on Twitter last week. Again, I am very constructive, happy to buy dips here in the GDX and gold miners more broadly. And I would say I'm wrong if we get a weekly close under $27, 27.00 in the GDX. And I would say I'm wrong and I'm out of this trade in the near term. Obviously, the key upside level is $30. It doesn't take a rocket scientist to see resistance in the chart. Multiple times it's been tested and price pulled back after reaching $30. It also happens to be lining up roughly with the 200-day moving average, which is flattening out. Two more topics here this morning: medical psychedelics, more specifically CYBN and Hercules Silver. All right, so CYBN. So for those of you who aren't big on the medical psychedelic sector, don't even really pay attention to biotech, CYBN is like the number 2 company in the medical psychedelic sector by market cap. And you could say it's arguably one of the leading companies at the leading edge of doing research on psilocybin and other medical psychedelic compounds, right, for the treatment of mental health conditions such as anxiety, PTSD, et cetera, et cetera, et cetera. Cybin put out some very important news in late October. It was the result of a phase 2B study of their psilocybin compound called CYB003. So this is a proprietary formulation of psilocybin for MDD. Okay. And the results were actually very good, quite stunning. And I did an interview with the CEO last week. You can find that on my timeline on X, or you can go to medicalgold.ca. It's the first article at the top of the list. So one of the key things is that Cybin has multiple phase 1 and phase 2 trials that are currently underway. For CYB003, for CYB004, and for one other one. But what we're most interested in here is in the near term is the next data readout. So the top line, readout from CYB003, a detailed, review of this data is going to be announced on Thursday, November 30th. So they put out this news last Thursday morning, that they're going to be holding an R&D briefing on Thursday, November 30th at 10 a.m. So this is something that you could watch webcast live, and you might even be able to ask a question if you do have a question. So what's so interesting about this is that Cybin just raised $30 million, actually a total of $64 million, but only $30 million has been taken in by the company to date. And then at a later date, there could be another $34 million tapped into through 51 cent per share warrants. So the stock is currently trading at 45 cents. This market cap is actually wrong. It's probably closer to 150 million today. But the company has a lot of cash now. They have like $40 million in cash, $150 million market cap, but they're going to be spending that money, obviously, advancing their various candidates, the CYB003, the 004, et cetera, right? But the transition from phase 2 to phase 3 is one of the big re-rating moments in any biotech company. So Cybin is completing this phase 2 here in the coming weeks. We're going to get another big update next Thursday. As I told you here, they put this out last week. And I expect them to update multiple things about this phase 2B study, including the effects of a second dose of CYB003. The results they put out at the end of October were just after 3 weeks after a single 12 milligram dose of CYB003. So this next update will have the results of a second 12 mg dose of CYB003. And also there will be some data on a 16 mg dose of CYB003. So there's going to be a lot of additional data from this phase 2B trial. And I'm optimistic it's going to be positive. Okay. I don't think a company would hold a press conference and put out a big, a big presser to announce it unless they had something positive to talk about. So this will be next Thursday morning, 10 a.m. in New York. I'm long Cybin, and I intend to add to my position in the future. I'm quite bullish on this company and quite bullish on the fact that this sector is so bombed out and so hated right now. that the valuations are actually very attractive, and I see some major transformational news flow coming over the coming months and throughout 2024 from a number of companies in the sector. So CYBN, um, yeah, we're also going to get phase one data from CYB 004 for anxiety. Okay, so there's a lot of news flow coming from this company, between now and year end, and then well into next year as CYB 003 transitions from a completed phase two to a meeting, with the FDA to discuss the phase three and then the start of the phase three. And CYBN is fully funded for all of that. So I'm quite optimistic here at 150 million market cap that this could have substantial upside. Final topic, junior mining. So yeah, I do it all. I talk about the Nasdaq. I talk about Treasury yields. I talk about commodities like crude oil, natural gas, and I also talk about junior mining stocks and medical psychedelic stocks. So Hercules Silver. This is the final topic du jour. And I just want to be very clear that everything I present in these videos, I am doing my absolute best to be as objective as possible, to just tell it like I see it, be completely honest, as much as I possibly can be. Okay. And I'm going to be like that again with Hercules Silver and talking about how I analyze risk reward in a junior mining stock. So Hercules, so let's pull up the chart. Here it is. Let's get rid of some of these. We don't need these anymore. We discussed CYBN, we discussed GDX, we discussed Walmart. Okay, so big. So this is the chart as of Friday's close. I haven't updated it. It's down a little bit here this morning, but you can see the day high 162, just a meteoric ascent from 20 cents a share in early September to over 160 a share on Friday afternoon, right? So that's an 8x. That's an 8x, and it's an 8x for a company that didn't have a tiny market cap of 20 cents. It had more than a $30 million market cap in Canada. So in CAD, not US dollars, but CAD, more than 30 million Canadian dollar market cap at 20 cents a share. And at Friday's high, if you do the fully diluted market cap, so all the warrants and all the options, you got to throw it in there to get a fully diluted, because all the warrants are in the money, the options are in the money. So in my mind, if they're all in the money, you've got to count them. Yes, the company definitely has a lot of cash and a lot more cash to come in if all the warrants and options are exercised. But let's do the fully diluted calculation, because juniors spend all their money. That's just how the business works. Okay. They're not banks that hold their money in vaults, right? They are doing exploration work. They have corporate overhead. They spend the money eventually. So 264.83 million shares times. So I used the 164 share price because I thought that was the high. Maybe Stock Charts is wrong, or maybe I'm wrong. But anyway, it's close enough. 430 million Canadian fully diluted market cap for Hercules Silver. That's a big number. Okay, so I just want to be very clear. This company has now moved to a very big valuation. In fact, there's a number of mid-tier producers that have smaller market caps than 400 million. Okay, so Hercules is already being valued as a mid-tier producer when it's still in the exploration stage, and it actually only has one drill hole, reported into a new discovery. So it's a very aggressive valuation that's pricing in a lot of really good news. Now, I just want to be clear. I love the company's story. I love this new discovery. I think it has a lot of potential. no doubt about it. Okay, I've been a big advocate of the company since October 10th, and I've done my best to give all the information and knowledge that I have about the new discovery and the company to you guys in these, YouTube videos. But at some point, we have to have a profit-taking strategy. We have to say at some level, it's time to take some money off the table. And last Friday, at a $430 million fully diluted valuation, I took some money off the table. And that was more than a 5x for me from my cost basis in BIG. Okay. BIG.V. BIG is the symbol on the venture. So I took some money off the table. I sold some shares last Friday. Don't hate me, just being honest about it and trying to give you some insights into my thinking here. We know that the timeline from a new discovery to production in the mining sector averages 17 years. So that's just being honest. The average timeline from a new discovery, the time that first hole is drilled into the new discovery to production, takes 17 years. And now, not every one takes 17 years. Some take longer, 20, 25 years. I mean, take a look at Pebble in Alaska. The discovery was, I think, 2002 or 2003. It's still not in production. It's still not close to being in production. So that's 20 years. And even if the best case from here on out, it would take another 5 or 6 years, right? Sometimes companies are just absolutely amazing. They have everything falls into place for them, and they get a best case timeline of about 8 years. So, I mean, if you can advance a new discovery to production in 8 years, you are a world-class management team. You're the cream of the crop in the global mining sector. 8 years is virtually unheard of, right? But even if we assume that Hercules will, with Barrick's backing, be able to advance this in a best case timeline of 8 years, we're still looking at time value of money, basically telling us that Hercules already has $1 billion, discovery, $1 billion copper porphyry in Idaho. Okay, you have to use a 10% rate because it's base metals. And frankly, with the 10-year at nearly 5%, I think that as a conservative investor, you would want to use a 10% interest rate to analyze future cash flows. Okay, just to be on the conservative side. Companies might use 7.5 or 8% in their PEAs, in their presentations, but I'm going to be on the conservative side and I'm going to use a 10% rate, especially when we're using an optimistic timeline to production of 8 years, right? BIG's current market cap is the equivalent of a $930 million NPV for the project 8 years from now. Because, there's no cash flow from this new discovery for a minimum of 8 years, right? So the money today is valuing those expected cash flows out a minimum of 8 years from now. There's no real possibility that, BIG will generate any net positive cash flows for a minimum of 8 years. And to be more realistic and conservative, probably more like 10, 11, or 12 years, right? So today's 430 million fully diluted market cap is pricing in a lot of really good news and being quite optimistic as to the size of the discovery, the average grade of the discovery, the timeline to advancing the project. A lot of optimism is in the share price at $1.64 a share. Okay. Now, I still think this has the potential to be that $1 billion new discovery. Okay, I really do. But when I look at the risk, the potential downside versus the potential upside, I think at 160 a share, the risk is now outweighing the potential upside in the near term. And that's why I sold some shares on Friday. It's really that simple. I'm not trying to bash the company. I'm not. My opinion on the value of this whole 2305 and what could be there in Idaho has not changed. Just the valuation and investor expectations have changed, right? And so I have to reduce my risk. That's just me being completely clear, upfront, and honest about my thinking, my thought process here. And that doesn't mean that I won't be a buyer in the future, maybe even at a higher share price. Okay. Um, so that's just me telling it like it is, telling it how I see it, full rundown of my thoughts on the broader market, and the macro, the CPI, PPI data. I still see it coming back towards 2% over the coming months, with the Fed quite likely to start rate cuts in the first half of 2024. Tailwinds for precious metals. Consider me bullish on gold and mining shares into year end. Thanks a lot for your time. If you found value in this video, please hit the like button and subscribe to my YouTube channel. Have a powerful trading week.